Hi.
How are you?
Well, I'm okay. My lighting in here, your lighting is so much better than my lighting.
I have a big light.
I wonder if I should turn my ring light on.
Yeah, I have one of those big, huge lights that are on behind me. I'm doing this. I mean, I live on Zoom now. I always did them with my clients anyhow, but that way they can see.
This doesn't work. Oh, no.
You got to put it in front of you. So it's got to be where it's shining on you. Yep. Yeah, better.
Is it?
Yep.
Okay.
Better. All right, let me see if I can get this live now. I'm just learning this one. Learning so much.
How do I do it? The watch party on my Facebook group page.
I don't think you can do it because I'm the one that's hosting it through the Zoom, but we'll share it to your page afterwards.
Oh.
So let me see. Share on your timeline. It says share on a friend's timeline. I can see if I could just share to your page. But you have a group. It's a group, right? Well, let's see. Can we find the group? What's the group name?
Rise and Elevate.
Oh,
I'm
yep.
wondering.
I got it. We can do that.
Oh, I was so you pay for, I only paid the $15, so you're paying a little bit more.
I don't know how much I pay, to be honest with you. I'll look. I don't think it's much more than that.
Let me know, because if you can do it on the $15 one, then I should be able to do it too.
Yeah, so if you go to your settings, you just have to enable live stream on there. So you probably can. But let's see. Looks like it's loading here. Okay, so.
Enable live stream is what you said. Okay. I will do that.
Okay. Let me see.
So are you able to see? I can't see anything but you.
It's taking a minute here. It says fetching up. I can see you. And then me. So maybe it goes back and forth here. But let me hit go live and we'll see what happens here. Let me put on here. What is going on? Mortgage. So much going on.
Right?
Okay. All right. Whoops. No one's out there.
I meant to get my cat out and it was in here.
Okay, so I hit go live. So let's see how this works. Hopefully it'll be both of us on here. Setting up for Facebook Live. Cool. Let's see here.
I think you're live.
I think so, but we can't. Let me see here. That is interesting. It's not showing it as live, but it is, I believe, live. This is really weird.
I don't know what we're streaming to because I don't see anything on the page.
There we go. I think this is doing it here. Looks like it just funnels. Well, that's really weird. It says live. Oh.
Yeah. Oh, we're there.
Are we? Can you?
Yeah.
Is it live though?
It's kind of.
Let me look.
We're live.
Live. Oh.
We got people watching us. Oh, we're there.
Are we? Can you? Yeah. Is it live though? Oh my goodness, it's just delayed.
It's kind of.
That's really weird. Okay, let's make sure that this is gonna.
We're live.
Okay, I think it's just gonna have like a slow reaction.
We got people watching us.
Okay.
Yeah. We're there. I'm gonna turn that part off. And we,
oh my goodness, it's just delayed. It's God, it's really weird. Okay, let's make sure. That
I would turn the Facebook part, like the face. I close my Facebook, so close your Facebook, I guess. I'm gonna turn that part off.
Okay. Oh my goodness, it's just delayed. God, it's really weird. Okay, let's Okay, so let me go back now.
Okay.
It's just super delayed in how it's responding. Can you hear me okay?
Yeah.
Okay, that's really weird.
Okay. So, hey everyone, Kim Retzlaff, Chicago Title. I don't know if you're watching because I'm not going to turn my Facebook on. We had some delayed feedback. And we wanted to get on here, jump on here. I have Kristin Cooper with Finance of America on here, and she's going to give an update of what's going on with the mortgage side of things. And then real quick, I just wanted to say thank you to all the folks that are still opening escrows. We are still open and working, and there's nothing stopping us, and we're here to help. So if you have escrow questions, just let me know. Everything's working pretty much really easy. We're just working with the county recorder's office and stuff like that. So I'm going to hand it over to Kristin, and she's going to go ahead and give us a quick update of what's going on in mortgage.
Hey there. Thanks so much for having me. Yeah, right now it's you know, I say business as usual in the sense that we're still showing up and working, but it's definitely not business as usual. So many changes going on. And I just wanted to jump on here. I think that I'm getting a ton of questions with my clients and partners, and I just want to shed some light on what's going on. I think that there's not enough education right now to give clarity to people. And if we just follow the media and what they're saying, it's far worse, I think, than what it really is. So I'm going to give just kind of a little bit of background of kind of how we got to where we are. And then if there's questions, I don't know if we can really monitor questions. If not, we'll get back to you and do maybe a Q&A or something on the questions that you have. But we'll answer some of the common questions that do come up. So again, Kristin Cooper, certified mortgage planning specialist, been in the business almost 18 years now. Pretty nuts to think it's been that long. And I guess, you know, going through 2008 crash, this is really kind of a little bit easier, I think, for me to be able to navigate. I don't have as much fear as a lot of people do that went through or did not go through the 2008 crash. So we'll talk about that a little bit more too. But we'll kind of start back with, you know, about 3.5 weeks ago, and we'll talk about the market, but we'll also talk about, you know, this tornado with the coronavirus and how that has another side. It's kind of like this two opposing sides that have come together and created this perfect storm. So we'll kind of talk about what that looks like. So about 3.5, almost 4 weeks ago now, everybody was aware, it was all over the media talking about interest rates are at an all-time low, which they were at an all-time low. And just to give you perspective, at that point where interest rates dropped, can you hear me okay?
Yeah, sorry.
Okay. At that point where interest rates dropped, there was about 5 billion people that could benefit from refinancing. And to put that in perspective, last year there was about trillion. There's about 2.5 trillion people that refinanced or purchased a home last year in 1 year. So lending wide, industry wide, there was that much in a year that was trying to be done in less than 2-week period of time. So we have a funnel issue, right? If you're used to doing that much business in a year and we're trying to do more than that within a small period of time, now we have capacity issues when it comes to lending. So even when typically when the market goes down, interest rates come down. So people are seeing that that's what's happening and thinking the interest rates are going even lower. But now we have a capacity issue where lenders can't even funnel through or get to the loans that are being done. A lot of lenders had to close shop and say, we're not taking any more loans. We can't handle the capacity. Well, with that, whenever your book of business becomes, for a lender, whenever you have a lot on your balance sheet, let's say you've taken a ton of loans, there's what's called these margin calls, which means the investors come in, then they say, hey, you have a lot on your books and we know that you're going to make this money when you close, but we're calling the money now. So lenders that were, you know, still lending had to give, I mean, we're talking millions, they're writing checks for millions to be able to cover these margin calls. So there's a lot of lenders that didn't have the liquidity to be able to do that. So then they would go and they would sell their assets on the books, and, you know, that's treasuries and bonds. And so it's impacting or they just had to say, not doing any more loans. We can't offer any more loans. So although interest rates were coming down and people thought that they were coming even lower, interest rates are actually being driven up because lenders had to in order to pretty much turn away business. They just couldn't handle it. Now comes in the coronavirus. So now we have the coronavirus that comes in, which at first was just more of, okay, some, you know, slight mitigation, people, you know, just be safe. And then it turned into this whole lockdown that we have, which created now an issue with people being able to, you know, make their mortgage payments and losing money. And the unemployment rate last week was 3.3 million. And then this week it came in 6.6 million. So we're talking 10 days that we had over 10 million of unemployment, new unemployment claims that came in. Now, I want to keep in perspective because that's a huge number and people start freaking out when they hear that number. A good portion of those people are going back to work because this is just temporary with the virus. She wants to be included.
All right.
So this is just temporary for most people. They're going to go back to work. So we need to keep perspective that yes, it's a big number. It's not a crash. A lot of these people will be going back to work. But what that does is now it creates risk factor for lenders because what if that person's not working?
Is that why they hired the credit score?
Yes, so we'll talk more about that. Exactly. So now you have capacity issues. And so we're still working through all those. I mean, I know we're, 60 days on our refinance, which is really actually pretty darn good. A lot of lenders are 120 and a lot of lenders aren't even locking loans anymore. It's pretty crazy. But so they have capacity issues. Now they have these margin calls so that they're having to write big checks. And now with the virus, what's happened is all these people that were refinancing, mind you, you have your lender, which would be like us. We would lend the money. And then you have your servicer, which sometimes can be the same, but the servicer is who you make your payment to. So all of these servicers, when they took over the servicing, they pay, let's say, a 1% of the loan amount as a premium to buy the servicing of this loan, and then they get paid a premium every year. Well, it takes them like 3 years to make back the premium. So all these people that are refinancing, a huge portion of them don't even have their loan for at least 3 years. So they're refinancing, the servicer is losing money. So the servicer is now having issues with that, as well as people making their mortgage payments, which we're going to talk about forbearance and how that has an impact to servicers as well. So what's happened is servicers just said, there's no more market for servicing. So lenders can't sell to servicing right now. So if they take in a loan and they can't service the loan, they have nowhere to place it. So that's a huge, huge concern. So lenders such as our company, we're going to retain our own servicing, so we're fine. We're able to do that. But if we're going to retain our servicing, we need to make sure that those loans are sellable when the servicing comes back. So that's why we have more restrictions now, is that now we're heavily looking at ability to repay to make sure that all of these loans that we do take on, that they're able to make their mortgage payment, that they're going to be sellable. So that means higher credit scores. That means more reserves are going to be required. That means more stringent income on self-employed. So you're seeing all these things, tighten up. Down payment assistance, super risky. So that one's usually the first that's going to go. So you have all these restrictions that are coming out, and to us as the lending side, I mean, it's every day. We're on calls and we're on updates every day. And as a mortgage planner, I on higher commentary, so it's a lot during the day that we're getting updates on. But we need to make sure that this servicing can be sold. Now, the other side of it is the servicing. There's clause in it that says if we close the loan, so we the lender close the loan, and we hold the servicing. Servicers, if there's a late on a mortgage payment, you can't even sell that servicing anymore. So let's say that somebody takes on the new loan and then they do what's this forbearance, which we're going to talk about. We can no longer sell that loan. We have to retain the servicing of it. Huge, huge risk. So when there's huge risk, obviously that's going to take the shape and pricing too, to make sure that we're going to be okay. So that's why you saw interest rates rise. And they're like up and down all day long. And we're still at good rates. I mean, you're looking at 3-4% ranges, which is amazing. It's just not where we were. So, and there's a lot of volatility where they're moving all day long. So that's kind of here's kind of one side. And then we had the virus come in that had its impact. And then that's kind of where we're at today. The biggest concern that we have right now is the forbearance. And that's the one thing that we really want to touch on. And I want to be very clear with everybody that they understand, because I did make it through the 2008 crash. And in 2008, they came out with a lot of these stimulus packages and these programs and said, hey, this isn't going to hurt you or impact you. And that wasn't the truth. That wasn't what happened. So first of all, on these forbearances, it's a forbearance. It's not forgiveness, which means if you call your servicer, whatever they're doing for you, you're paying that money back. It's not free money. It's not something that you're going to just, it's okay, it's forgiven. And most of the servicers, there's different options. So let's say that you call a servicer, and I've called most of them, so I'm pretty versed on what they're doing. You call a servicer and say, I want to take advantage of the forbearance. First of all, right now, you don't even have to have a reason why. You don't have to show hardship of why you're being impacted. You just can call and say, I want to take advantage of the forbearance. But what they're doing is, let's say they gave you 3 months of forbearance, meaning you don't have to make your mortgage payment for 3 months. However, at the end of 3 months, they're going to say, you owe us through 3 months and your 4th month payment is due.
So they're not telling people that.
Well, I mean, when you call them, they're supposed to go over the disclosures with you, but I want you to be prepared to ask the questions to know, because a lot of people are thinking, oh, this is fine, I'm going to be good. And then who's going to have 3 months of payments if you can't make the payment today? Well, what happens once you're 3 months behind and you hit that 4th month payment? Let's say you can't make that fourth payment. What happens to your property? You're going to start going down the foreclosure process. So you're actually putting yourself in a position where you can lose all the equity in your home.
Wow.
You know, yeah, and people just don't realize that that's the impact. Or they'll say, a lot of them right now are saying, we'll do the 3 months, but we'll renegotiate something in 3 months. Be careful with that, because it doesn't mean that they're required to renegotiate. It just means they may have a conversation with you, and if they don't, you're in that position. So if you do take
do you have a list of questions that you put together that you can put on this or send to me or to your clients about what questions you should be asking? And because this is serious, like I wouldn't think that that they would do that.
And that's why I'm doing these videos. I have another video on mine, but yeah, we can, I'll go back and I'll put questions below. So you want to find out what the terms are. And, a lot of times they're very good with their words to make it seem like they'll do something in the future. Let's just get you through this. We'll go through the future. In the future, we'll deal with it when we get there. So be careful with that. The other thing that they could do is they'll say, okay, well, at the end of 3 months, if you don't have the money to pay, then it's kind of like an escrow account where they're making up the cost. They'll say, we're going to take the 3 months that you owe. We're going to divide it by 12. And then we're going to add that on top of your normal payment for the next 12 months. So your payment now goes up to cover the difference. So my point is, it's not free money. Some of them are doing what's called putting it on the back of your loan. So they'll say, we'll defer it to the end of the loan, which is fine if they're doing that. And a few servicers are doing that. But a couple things that you need to keep in mind is it's a balloon payment at the end of your loan. So when your loan is refinanced, or when you pay off your loan, that amount is due. So whatever that 3 months is, you owe that amount at the closing. So you need to be prepared that you're going to be able to pay that in full. It's not like we're just going to extend your term. So it's really important that you know that and that you understand that too. It's just there's so much false information out there about this forbearance, and people are thinking that they could just take advantage of it and not have these payments, and they don't understand the consequences that can come from it later. Now, I want to be very clear. There are some people that need this. I just want them to be prepared that whatever it is to make it back and that you can pay it back, that you're going to be in a position to be able to do that. Just make smart decisions and make sure that you're putting yourself in a good position, because it could end up costing you thousands more and potentially losing your property.
So someone made a comment saying it sounds like the servicers should have kept larger reserves. What are your thoughts about that?
Well, I know that they're working right now on trying to put something together where the feds are going to work with servicers. Here's the other thing that I want you to be prepared with. And yes, I do think that, but here's the problem with servicing. And a lot of people don't realize how servicing works. So a servicer oftentimes will buy servicing. So let's say they're paying a 1% premium, which means 1% of the loan amount to buy that premium. Well, sometimes they will have a loan on half of that amount until they make back the cost too. So really they paid half a point and they have a loan at half a point, and now they don't have the money coming in. So they're even more in debt than what you would even think, at that point. So there's that side of it. But the other thing with the forbearance that a lot of people need to understand, if you have an FHA VA loan, no matter what, if you're in forbearance, that servicer still has to make your mortgage payment to the investor.
Okay.
So let's say there's 25% of people that have mortgages that decide not to take the forbearance, and all of those servicers have to make your payment to the investor, and they have no money coming in. They're losing money on your refinance. That's why no one's taking on servicing. They're like, we can't, that's it. We can't, right now we can't do anymore. Eventually it should come back, and the feds are talking about trying to put something together, some type of stimulus or something for the servicers to be able to get reimbursed for the payments, or something. I know they're trying to work on that, but right now that's the issue we have. And if that happens, that will be if that doesn't happen, and if servicers continue to be in the stage they are, and if people take on forbearances without knowing the circumstances around it, it's going to really hurt housing and economy. So it's something that people need to be aware. This is not free money. It's not something that you don't have to pay back, and it's creating a bigger issue if you take it and don't need it.
So do you have any stats on, like, have you seen people taking the forbearance? I don't know anybody personally that's done it, but I'm just curious.
Yeah, they were talking about it on one of the economist calls this morning, saying how, gosh, I can't remember, but yeah, when it came out because the forbearance just came into effect. But when it first went into effect, that they had record calls to servicers to be able to take care of the forbearance. So there was huge activity of people taking advantage of it, or at least inquiring to take advantage of it. So the numbers haven't come out of how much. Obviously, we'll have it after this month to know how many people, probably by the 15th, have more updated numbers, but a big amount. I mean, obviously there's, 10 million unemployment claims in the last 10 days. So there are a ton of people that are impacted, but I will tell you the people that I've been talking to thought that it was free money. So I'm hoping that when they call that they are getting properly educated and that they understand what's happening. And that's why I wanted to really get on and kind of do a video and update people and be like, hey, ask these questions. When do I have to pay it back? What happens if I don't pay it back? And be very, very leery as to the fact if they say, we'll work something out later. Get stuff in writing up front, because that doesn't mean anything. And when you go back later, right now they're working with what they have to from the government. They're mandated to have to do it. But after month 3, if it's not, continue to go further after month 3, all bets are off. And that goes to the credit too. That's the other thing. If it's not reported to your credit for 3 months, that's great. And this is the same thing that happened back in 2008. But that 4th month, if you're late or you can't make your mortgage payment, or God forbid you now owe those 3 months and you can't, guess what? You're late. Also, it's going to impact future mortgage financing. I can almost guarantee it. Same thing that happened before, where they said, we're not going to report it on your credit, and they didn't. But now you went to refinance or purchase within a year and you can't, because you don't have a full 12 months payment history on time. So it will impact you. Be careful if you're looking at refinancing or purchasing within the next year. Highly discourage you from doing it. And if you just took out a loan, make sure that you're making your mortgage payments, especially, if you can't, that's one thing, but if you can, don't take advantage of it. Only use it if you need to. The economy is trying to come together right now to help the people that really need it. But if we don't work together and make sure that we're only taking it if we need it, it's going to hurt things even more.
Right. I still am seeing people buy and sell out there. We are opening escrows. How about you? Are you still working on?
Oh yeah.
Mm-hmm.
Yeah. I mean, it's like I said, guidelines are changing every day. I mean, every day it's updates. So we're like on top of all of our pre-approvals that we have, just, creating columns of all of their different parameters to make sure that we can keep on top of it. But no, we're still, I mean, really it's 660, 680 credit score. As long as you're above that and you still have jobs, I mean, financing is still there and interest rates are still really good, and it's still a really good time to buy. Some would argue that it's a great opportunity for buyers because there's less buyers that are out looking. And I don't see housing really being impacted that much from it, because we are still at a very low inventory. And if anything, more buyers that wanted to buy that couldn't come out are still going to be there and need to buy once we're ready to go back out.
Right.
What's your take on that? How do you feel about it?
I think that, I'm still seeing a lot of my agents still push escrows through. They're, I'm getting a lot of pre-opened, a lot of listings pre-opened with hoping for a buyer to follow. A lot of them are switching. Obviously, you have to switch your business plan. You have to pivot to what's going on and go more as much virtual as possible. And I think that it's great. It's teaching a lot of folks different techniques and tools that they didn't have before.
Yeah.
So I love that about that. I think that I think more people are embracing technology that should have before and now are. And I do see the market still moving. It's a little bit slower, but we still have transactions out there. So one of the things I've been reiterating to my agents is that you got to keep, working, check on, my number one thing is work on your database, check in with those folks, educate them, be a value add, be a resource, and let them know that you're here to help and that you can still help them buy or sell virtually. It's going to be okay. So I think that's the big message. And I appreciate you doing this, because I think that is a huge thing with that forbearance. Like what you're saying, a lot of folks think it's just going to be, it could be put on the back of the loan, or or so-and-so, depending on how they work it out, but not asking the right questions, not knowing what they're getting themselves into, not knowing that it's going to affect their credit score eventually, or that they have to come up with that lump sum at the end of the 3 months. So this is great education. And I think the agents that are watching this need to educate their clients as well, and refer them to, if they are working with a loan officer, or back to you to ask those questions, because I think it all comes down to education. And right now the world needs that. So
I agree. Yeah, I send out a weekly video to my entire database, letting them know, giving them an update. Because of course I have way more in my database than to be able to, pick up the phone and call all of them. But that's what I say too, like to the real estate agents, you really need to be on the phones. Great opportunity for you to be calling and checking in with them. You have a reason that you're calling, you're checking in, making sure they're okay. You have resources available. If they're a business owner, you got the SBA, loans and all the other stuff that you can refer them to. Really great opportunity to let them know you're calling when you don't need something from them.
mm-hmm.
You're calling to help them and be the educated expert. And yeah, get your lender involved. If you have, like I said, I do a ton of videos, but you could do a joint video, even if you can't call the people or don't want to. Do a joint video and send that out to your database, educate them like, hey, these are the things that we need to be talking about. Biggest thing is try to end it on a positive note. Like I talk a lot about, like, because there's so much negative and people are getting so much like anxiety and anxious and overwhelmed. We all are. I'm tired of being at my home office, even though it's a full office setup. I'm like, I want to be around people. But just doing your best to encourage them and let them know, hey, this is going to pass. This is temporary. Housing is still the greatest investment that you can make. Rates are still amazing. Just take a minute and really just focus on what's your priorities right now. A lot of people have kids that are at home and they're just stressed out trying to work, especially agents. You're trying to work and manage that workload, and then you have kids and you're running around. Let go of the guilt, let go of the shame, and understand that your kids are your priority and everything else will fall into place and be okay. It doesn't mean sit and watch Netflix for 8 hours, but it does mean, because a lot of people are like, I can't get to it all. We're human. None of us are going to get to it all, especially if you have little kids. Thank God mine are older now, but if you have little kids that, you're dealing with, there's just no way that you're going to be able to do it. So just have grace and really know my priority right now is this, and then shift when you can shift, and just know that it's going to be okay. And that there is a silver lining, and, that we have the opportunity to take a lot from this. I know for me, I have a million things that I'm always trying to get to that I can never get to. So although I've still been working 9-hour days, busy with work, if it does slow down for me, I have a list of things that I can still work on.
Right. I agree. I think there's a lot of good that's going to come from it. And then it's a lot of overcoming some obstacles and some challenges, and then just asking for the help. I think that's the thing, is people just need to ask the questions and reach out to their valued resources. So I think, and I love your thing about it is a great opportunity for them to call their database right now, check in on them, ask them how they're doing, how they can help, and talk to them about the question, have you thought about doing the forbearance? Let me explain to you some things that can happen, blah, 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 blah. I think that's huge if they could come to them as that resource. So I love that.
And reminding them too, especially for people right now, things are changing. Like with America, in America, we are like so much debt. And so that's another thing that you could really, say is like, right now is an opportunity to get your finances in order. Get your budget set up. I just did a video on my page with links and all of the files and the spreadsheets and stuff, and telling people, take advantage of taking control of your finances right now. Even if you don't have as much coming in, you could still figure out where you are and create a plan going forward. Because if you have the momentum, you're going to feel good. You're going to focus on the positive, and you're working towards something better than focusing on what you don't have. And the same with like clients. If there's one thing I can say to, anybody that has clients, if you have I do a ton of first responders. So like I reached out to my nurses, anybody that I can, that I know is in the trenches right now. And I'm just sending, whatever you can do to help. Like I can't make masks. That's definitely not me, but I can send carts of like prepackaged foods and drinks and stuff to keep them hydrated and keep them fed. So focus on other people right now. Figure out a way that you can contribute to, to others, even if it's not monetarily. A kind text or a check-in with someone that especially first responders right now, is huge. They're working on very little, sleep and energy, and they can use all the we appreciate you that you can. So it's another good thing too for your clients.
Right. Yeah, definitely. Lots of great stuff here. So thank you so much for doing this. And
I appreciate it.
I didn't see any other questions on there, but when we're done, maybe go back in there and kind of put some checklists of some ideas of that they should be asking about the forbearance, and also put your a link to your page that you were talking about with the budget stuff. And so thank you.
All right. Well, you have a great weekend, everybody. Do something for yourself. Focus on something great, and have a great weekend. Bye.
Thank you.
Bye.
Bye.